This is a chart from when Janet Yellen was Treasury Secretary. Okay. In the white, what you're looking at is the reverse repo market. Okay. In the gold, in yellow, you're looking at Bitcoin. What this tells you as the reverse repo market was getting drained. So basically, a long story short, when Janet Yellen was the Treasury Secretary, she had similar. The game is, where are buyers of US debt? Where are buyers of US debt? How can we finance the United States continuing to spend ungodly amounts of money unprofitably? If you're not producing a surplus, if you're not producing a profit, you have to get someone to lend you money, right? You're running on debt, right? The United States is not running on a profit, right? They're not producing more value for the world than they're consuming. You have to find someone that's willing to borrow or lend you the money.
Jack Mallers doesn't hold back. He clarifies a single point in a world of financial uncertainty. Bitcoin is the currency of the future. Mallers sees a revolutionary answer coming soon when existing financial institutions collapse under the weight of government debt, inflation, and faltering fiat currencies. Bitcoin is a means of escaping the dysfunctional system, not merely a store of value. We explore Mallers' vision for Bitcoin's role in transforming global finance in this video, as well as his reasons for thinking it's the best defense against an economic meltdown. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
Let's talk about what this means and what we can extract from this information. So for those listening, number one is the Cayman Islands at over 100 billion. Number two is France. Number three is Luxembourg. Number four is Belgium. Number five is Singapore. Number six is the UK, and seventh is Tether, notably larger than Canada, Taiwan, Mexico, Norway, Hong Kong, etc., India, blah, 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 blah. You can see on the far right, many countries have turned negative. That's the first insight. China, extremely negative. What does that mean? They are selling more treasuries than they're buying. Japan, negative. Brazil, negative. Ireland, negative. India, negative. So you guys have to understand, nobody wants to hold these dog shit treasuries. Nobody wants to hold these things, okay? So you're starting to see massive, massive unwind, okay? When you see a market like gold going up and treasuries going down, that's not a coincidence. What is up for grabs is the world reserve asset. That is what's notably up for grabs. You're seeing an unwind from using U.S. debt to store your time, energy, effort, and labor. And there is an up for grabs, open free market competition from where you store your balance, where you store your capital, where you store your assets, where you store your time and energy. Okay, so you can see these massive countries on the right unwinding. They're negative. Okay, another very notable thing is on the far left, who's in first? Who's in first is the Cayman Islands. Why is this so notable? The Cayman Islands is so notable because, guys, it's not as if the Cayman Islands as a country is the most powerful financial country in the world. The reason it's the Cayman Islands is because it's a bunch of hedge fund bros that domicile in the Cayman Islands and sling around their hedge funds. So the biggest thing to take away from this is that hedge funds are the biggest buyers of treasuries. Hedge funds and Tether. I'm going to say this again. The biggest purchasers of U.S. debt right now are hedge funds in the Cayman Islands and Tether. That should blow your mind. When we do global trade, we operate in this giant deficit. We export dollars, we import real stuff. In countries like China, countries like Russia are producing. They're producing my iPhone. They're producing this hat. They're producing the energy, the oil that drives my Uber ride from here to the basketball gym. Okay? These countries are not investing in U.S. debt anymore. They're selling it. The only people investing in U.S. debt are stable coins and hedge funds. Hedge funds are running massive basis trades. Okay, is this all making sense? So when I go and show you guys this, okay, the volatility spiking so high, What's actually happening is all of these hedge funds are puking their treasuries. Okay? What we're seeing is this giant unwind. Where's the volatility come from? Who's selling and dumping all this US debt? Who's selling and dumping all this US debt is all of these hedge funds in the Cayman Islands. I don't think people necessarily appreciate who owns the US debt right now. It is not like China hasn't bought US debt in large quantity since 2014. So the US government has to find buyers of its debt. Who's going to finance the government and allow it to keep, spending ungodly amounts of money in an uneconomical way? That's the main question. And this was fascinating. Now, next.
A significant change in the U.S. strategy for international commerce is highlighted by Jack Mallers. Our tone has changed from one of haughtiness, we're the biggest economy in the world, so we don't need to care, to one of desperation. Why? Because our options are becoming limited. The domestic financial system has reached its maximum capacity, and foreign buyers have retreated. Only those who are compelled to do so, or who are engaging in high-risk leveraged bets, are still willing to take up U.S. debt. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
So this idea that the Treasury is trying to find liquidity and support financial markets, okay, that's not a new concept. This is a chart from when Janet Yellen was Treasury Secretary, okay? In the white, what you're looking at is the reverse repo market, okay? In the gold, in yellow, you're looking at Bitcoin, okay? What this tells you as the reverse repo market was getting drained. So basically, a long story short, when Janet Yellen was the Treasury Secretary, she had similar. The game is, where are buyers of US debt? Where are buyers of US debt? How can we finance the United States continuing to spend ungodly amounts of money unprofitably? If you're not producing a surplus, if you're not producing a profit, you have to get someone to lend you money. Right? You're running on debt, right? The United States is not running on a profit, right? They're not producing more value for the world than they're consuming. You have to find someone that's willing to borrow or lend you the money. So what Janet Yellen did is use what's called the reverse repo facility to do that. So you can look at this white line as it came down, it's coming down because money is leaving this facility and entering the financial system. And what you can see is a direct inverse correlation is as this thing got drained, Bitcoin went up, okay? As it got drained, Bitcoin went up. In this, now we're looking at historical data. This is not what's happening now. We're looking historically. But what we're looking at is a direct reaction to more fiat liquidity, okay? Historically, when there's been more fiat liquidity, this specific example was the reverse repo facility tapped by, at the time, Treasury Secretary Janet Yellen. But what we're looking at is when Bitcoin smells and sees fiat liquidity, so a reverse repo being drained and dollars rapidly entering the financial system, it reacts promptly. So when we see interviews like this from Treasury Secretary Scott Bessent, and he sits down, legs crossed, hands crossed, like, look at that guy. And he says, listen, I have what it takes to support this debt market. I got it. I will find the liquidity. I will engineer Treasury buybacks. We will change the rules on U.S. banks so that they can buy unlimited amounts of U.S. debt. Last time something like that happened was with Janet Yellen, and we saw this. Now, we'll have to wait and see what happens. It's very unclear, but that's where we stand today. So from last week to this week, not a ton of movement, not a ton of new, a lot of validating of what we thought and what was existing. We've seen a massive pivot from tariffs. We're the big bad US. We don't care what you say. We have the biggest economy in the world. You're going to sit down and listen, all the way to, this isn't very sustainable. The bond market's falling apart. No one's willing to lend us money and finance this country. No one's willing to buy our debt. We're in trouble. And okay, let's wrap this up with China. Let's make a bunch of compromises. And can someone find the liquidity and buyers of our debt because we're in trouble?
In his explanation of an important phase in American financial history, Jack Mallers shows how the country has moved from a position of economic dominance to one of greater vulnerability. He mentions the reverse repo market, which was utilized to manage the country's debt by Janet Yellen, who was then the Treasury Secretary of the United States. Mallers illustrates the connection between Bitcoin and the reverse repo capability with a chart. Bitcoin experienced a direct increase as the reverse repo market was depleted, indicating that funds were moving out of this facility and into the banking system. This is noteworthy because it demonstrates how Bitcoin reacts to a rise in fiat money. In essence, Bitcoin's value increases as more money is injected into the system. Mallers connects the dots between the past and the present. The United States is in debt and must borrow when it has neither surplus or profit. The reverse repo market was one of the methods the U.S. used to control this borrowing in the past, but it is now evident that both domestic and foreign purchasers are less inclined to provide money. The United States is in a vulnerable position as a result. Mallers makes a connection between this circumstance and present affairs, specifically the change in the tone of the U.S. government from belligerent and contemptuous to more accommodative and desperate. The U.S. is having trouble finding buyers for its debt, and the bond market is stumbling. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.